Welcome back to another episode of Making Sense of Long Island. Here we are in season 3. As you can see, we have myself, Chris Murray, your brand new host in our brand new studio. So moving up here at the Making Sense of Long Island podcast. For those who are new, concept is simple. Every episode we bring in local individuals who share some knowledge about, well, how to make life a little bit easier for us all here on Long Island. How to save money here and there, and overall just make things a little smoother for all of us. Trying to make our way here on Long Island. Today, we have a very excellent guest joining us. We have Dave Someria from Osaic Institutions and Island Financial Services. Now, Dave is a financial advisor. Now, Dave, everyone says they got a guy, right? When it comes to long-term planning, everyone's got that nephew who made $1 million in crypto and Uncle Joey who knows all the hacks around the IRS, but you actually are the guy. So what does it mean to be a financial advisor?
Okay. Chris, first of all, as you said, my name is Dave. I've been in the financial industry over 40 years. I was a bank manager for a number of years. Then I joined in 2011. I became a financial advisor. I work for numerous firms. I'm currently with Osaic Institutions. Now, Island Financial is a financial advisory practice of Osaic Institutions, okay, which has a partnership with Island Federal Credit Union. Okay. My goal as a financial advisor is to give professional advice to help clients manage their finances. It means providing advice on investment, retirement planning, insurance, and other areas of personal finance. My goal is to help people make informed decisions and reach their financial goals. It's also essentially about guiding people how to manage their money. Wisely, it means advising clients on budgeting, investing, and retirement planning, taxes, insurance, and other financial decisions. Ultimately, it's about helping people achieving their financial goals with informed, personalized guidance.
So, Dave, when you say, long-term financial planning, I think a lot of people want to know, what age do I start talking to a financial advisor, right? Is it fresh out of college? Is it as I'm approaching Social Security age? What age do you think is the right time to first reach out to someone like you for your services?
There's actually never a right time.
Okay.
It can be as young as soon as you start having your first paper out, okay? Which is good because it's never too late. It's always good to start early. The majority of time people needs help are between the ages between 20 and 30s.
Really? That early? Okay.
Because that's the time they're actually planning for retirement. They're looking to buy a home. They're actually planning for a wedding and going on that vacation. But that's the time really that a member needs to really speak to someone about financial advice.
Okay. So when it comes to financial advice, there's various types of accounts and products and things like that. Can you go over just some of the various types of vehicles you can use to save long term? And maybe talk a little bit about how some of the taxes play into those various types of accounts.
Well, Chris, there's several financial planning instruments available to our members. Retirement accounts like 401k plan, IRA, as well as health savings account, mutual funds, stocks, and bonds. Of course, there are tax implications of each of these products. For example, traditional 401k plan and IRA contributions are typically tax deductible. But withdrawals in those retirement plans are taxable. However, Roth IRAs or Roth 401ks are made with after-tax contribution. That's post-tax dollars. But qualified withdrawals are made tax-free. And there's certain parameters that someone has to. They have to be over 59 and a half. Okay. And they also have to have the 401k, the Roth IRA or Roth 401k plan for at least 5 years.
So it sounds like Uncle Sam's getting his cut one way or another, right?
Absolutely.
The front end or the back end.
Absolutely.
Dave, I'm sure when you talk to members and you talk to people at various points in their ages, everyone seems to have some misinformation. There's a lot of TikTok advisors out there and YouTube stars out there. What are some of the biggest like myths and misconceptions you run into on a day to day that you kind of want to clear up a little bit?
I think people needs, like you said before, they're people who actually they play the stock market.
Right.
Okay. And that they talk to their buddies, their aunts, their uncles. Not everyone can do those types of investments. So I think it's important. I think the biggest misconception people have is to make sure that you talk to someone who has the knowledge and expertise to help you.
When it comes to things like stocks and bonds, I guess that could be a part of your long term savings, but maybe they're a little riskier, right? They're going to be on the front end, maybe. So, whereas some of the vehicles you talk about are a little more risk adverse,
That's
right?
correct.
Can you talk about some of the products that you offer that maybe hedge some of the risks, that maybe kind of cut some of the downside potential to maximize someone's long term savings?
We have different products. We have annuities,
Hmm.
which I know a lot of people are not familiar with annuities.
A lot of negativity out there around that word,
Yes,
but
because in the olden days, the annuity were different. In order to take money out, you have to annuitize the contract, meaning you give the money to the insurance company, and at that point, they'll give you a payment every year. Now, the newer annuities are different. They're
okay.
different kind. There are lots of bells and whistles. Some annuities have zero fees. Okay. Some have buffer protection on the downside. Okay. So there are a lot of products out there that members that I offer to members that really can give them some peace of mind. Keep in mind, all investments that I do, it's not guaranteed.
Right.
Okay.
But they're intelligent investments, right? You're not just throwing darts at a dartboard and spinning a roulette wheel, right? They're well thought out, well researched, and like you said, you examine the upside and the possible loss, and kind of based on that individual person where they're at in their life, can find the right product for them.
Absolutely.
Okay,
Absolutely. So when they come to me, I sit with them and do an analysis. I look at their income. Then I look at their expenses. Okay. And then I look at their investments that they have. At that point in time, I'll say, listen, let's move some here, some there, maybe in a managed money in an advisory account or some into an annuity or any other investment options that they feel comfortable with.
got it. Okay, okay. Yeah, you talk about that advisor account and some of the other products out there. Life insurance is something that we hear all the time, kind of growing up, right? I know on college campuses, you got the Northwestern Mutuals, and all of them are out there trying to recruit the next generation coming up, and how you can become a millionaire selling life insurance. And some people actually, I'm sure, go on and do. But what role can life insurance play in your long term financial planning?
Well, when people talk about life insurance, all they think about is death benefit.
Right.
But there are other benefits also with life insurance policy. There are basically two types of policy. So you have a whole life policy, you have a term policy. Whole life policy is a permanent policy that provides coverage for the insured entire lifetime as long as the premiums are paid. Now, there are also different types of payment method out there. You can pay off a permanent policy within 10, 20 lifetime, 10 or 20 years, or a lifetime. So you have that option. In a permanent policy, it also typically grows cash value. There's a cash value component in the whole life policy, which grows over time, and you can borrow against that policy.
Interesting. Okay.
Now, a term policy, on the other hand, provides coverage for a specific period of time, such as 10, 20, 30 years. Based on past experience, most of the clients who would buy term policy, newlyweds, they're looking for that benefit. God forbid something happens to them, they or their spouses, whereas they'll have funds to take care of the spouses and their kids.
Okay.
It's a very cheap form of life insurance. However, there is a termination date or the benefit expires after 10, 20, 30 years.
Got it.
Okay. So, what I do with my clients, I'll have a combination of both.
Okay.
I'll have some permanent policy or some term policy. Or what I would do, if it's all you could afford now, because what happens also with term policy, you can buy a larger amount with less money. Okay.
Okay.
Now there's a convertibility option with those term policies, whereas you can then convert part of that policy to a permanent policy. The nice thing about it, whatever they rate you as on the term, no matter if you become ill, they'll convert that policy at the same rating. So if you got preferred best when you took your term policy, and 10 years from now, God forbid you became ill, you have a heart issue, doesn't make a difference.
Okay.
You're able to convert that to a permanent policy at the preferred best rating. So you'll save money that way.
Yeah, I'm seeing now more and more why you need to have a guy like you to talk you through these options, because it's not as simple as just one versus the other. It sounds
Exactly.
like it really is kind of on a case by case, need by need issue.
That is correct.
We talk case by case, and I think one question some people have is it too late for me to think about retirement? For instance, we're on Long Island. It's expensive. You get that first job and I probably should start saving, but you want to save for the house. And then the kids happen. You keep pushing it back, pushing it back. Are there any kind of general best practices you could think of for if someone's maybe in their 40s or 50s and hasn't given much thought, how they can kind of maybe catch up and make up for lost time a little bit?
Well, generally, it's never too late to
Okay.
start investing.
Okay.
Okay. 30, 40, 50, 60, there are a lot of options available. First of all, if you're working and your employer has a 401k plan, and if they're matching, you should actually contribute that same matching amount so they can match it. It's like getting a raise every year and you're not taking it. Okay. That's one option. The other option is that maybe you want, as you start maturing, I don't like to use the word older,
Yeah.
but as you start maturing, I think you need to look at your expenses. If you can cut back on your expenses and contribute more towards your savings plan, I think those are great options for you.
So
Maybe
sitting with
get a
someone like you and kind of realizing, all right, maybe I don't need those 18 Netflix subscriptions, right? Maybe we can cut down some expenses here. Maybe I don't need the new Mercedes every 3 years. Really kind of analyzing needs and wants and bringing that side down while also contributing to the long term.
Exactly. So there are a lot of opportunities out there. Like I said, it's never too late.
Good. Okay.
It's never too late.
Speaking of never too late, I think we all hear those stories of people outliving their money. And thankfully, people are living longer and longer, which is a very good thing. But at the same time, then people aren't necessarily budgeting for when they retire to make sure their money lasts. What are some of the things you do with your clients to help make sure they never have to stress about outliving them or their money, not making it into their money?
One of the issues I see with most of our clients is that they believe in CDs. Now, I go back in the 80s where CDs rates were 15, 17, 20%, and you'll get a clock also with that.
Or a toaster.
Exactly. It's not the same anymore. CDs are hovering around 3-4% maybe. And this
Inflation's higher, so it's not really making. Yeah.
exactly. You have to have some money in the market. I know it's not guaranteed, but the market has always outplaced the savings rate. So that's one option. The second option is, like I said, you have to reduce your expenses. Okay, you have to, because I think when people retire, they believe they'll be spending less. Actually, the majority of the time, you're spending more because you want to go out for more dinners, you want
Get
vacations.
more time on your hands now, all of a sudden, right? Not grinding away 40 hours a week.
Exactly. So I think it's important that people really look at their lives and kind of, think in terms of what changes they can make to help their financial situations.
You know, I have a 401k as well, and it had some calculator on there, and it said, by the time I hit retirement age, I'm gonna need $16,000 a month, which seemed crazy to me, but I guess 30 years and inflation, all that kind of fun stuff. Is there any kind of formula people can use or any type of math that you would recommend to kind of calculate what somebody may need to put aside to live off of each month as they're kind of planning the long terms, factoring in Social Security, 401k, pension, things like that?
Well, there are a bunch of online tools.
Okay.
They have bank rates. There are calculators you can use that pretty much factor in what your interest rates will, what you can project what your interest rate will be. And it basically gives you a guideline how much, if you contribute X number of dollars a month or a week or biweekly, based on a certain interest rate factor, how much it will grow at a certain point in time. So I think there are tools out there that people can use now that would help them tremendously.
But I think at the same time too, you don't want to go to any website and start giving out your social information like that, right? I think finding someone like you to talk to, where you know they are a financial advisor, and you're not just trusting some website here or there, is probably the best way to do it.
It is.
Yeah.
It is. It's always good to have a face-to-face conversation with someone. Someone can look you straight in the eye and tell you, well, you know what, you need to do. You need to start increasing your savings account, or guess what?
Yeah.
You won't be eating that steak. You'll be eating maybe sloppy Joe or something like that.
Dave, I kind of get the feeling you're going to tell people what they need to hear, not what they want to hear. And sometimes you need that.
Absolutely. Like I said, I've been in the business for a long period of time. Working as a bank manager, I've learned a lot about people. And that's what helps me more so as a financial advisor, because you got to be honest with people. It's not about how much you're making, but how much you're saving for the future.
Right, yeah. I've got friends who I know are making great 6, pushing 7-figure salaries. They don't have a dime to their name because they're not living within their means. They think it's going to keep happening, and then one thing happens in the job market, and all of a sudden, just like that, it can all go away if you're not planning things the right way.
You have to plan. You have to plan. And even the 401k plan, I keep telling people, I have 2 daughters. One is 35 and one is 30. And I'm preaching every day for them to increase their contributions to 401k plans and other plans, retirement plans out there, because, at the end of the day, like you said, if you lose your job and you have a 401k plan, yes, you can take that money. Yeah, you got to pay tax. If you're under 59 and a half, the taxes and penalties, but at least you have something to survive on till you find your
Worst
next
case scenario, you have something at least to dig into.
Exactly. Chris, the 401, with the Secure Act that recently passed, they just increased the 401 amount to tremendous amount of money. People who are in there.
You got a lot of numbers memorized there.
I
so
know,
I'm gonna,
I know.
I'm gonna give it to you. You got a lot of things you got to memorize there.
So someone can contribute up to 24,000 in the 401k plan. If they're over 50 years, there's an $8,000 catch up. So someone can contribute up to 32.5. Now, the beauty of it with this new law that passed, the Secured Act, if you're between 60 and 63, the government allow you to, instead of 8,000, you could put $11,250, which is a maximum contribution of $35,750. That's a lot of money. IRAs, I remember in the olden days, it used to be $2,000. Now it's $7,500 a year.
Wow.
And then if you're over 50, then the government allows you another $1,100. So you can contribute up to $8,600 a year.
So going back to my earlier question, people who are a little, more mature,
Right.
There are ways to catch up a little bit, but you
Absolutely.
just have to know those limits and how they change from year to year and which accounts at different thresholds and so on and so forth.
That's why they need to make an appointment
Yeah.
and see me.
So how do they see you, Dave? If somebody wants to talk to you, have that sit down one-on-one, because like you talked about, everyone's situation is so unique. What's the best way to get a hold of you?
You have Island Federal have me listed as their advisor on their website. If you
Perfect.
go on the investments
Yep.
and click on the investments, you can schedule an appointment to meet with me. Also, if you visit the branch, you can also try to schedule an appointment with me. The branch members, they're wonderful. You know, I've worked a number of banks at Island Federal. The employees are just great. So you can talk to them. They'll be able to help you. They'll help to give you my name, phone number, or if you don't mind, just give them your name, phone number, email address, and I'll contact you. I think that's the best way.
Perfect. So just head to islandfcu.com/investments. You'll find Dave's information. If you're watching on YouTube, just head down to the description. If you're watching on social, islandfcu.com/investments. Have a one-on-one with Dave. And what's the line you always give me, Dave?
Like I always says, I borrowed this from my former boss actually. The appointment is free. The advice can be priceless.
So, Dave, if somebody's currently working with a financial advisor, what are some of the questions they should ask themselves about what they're getting from that service?
Well, first of all, even if you have a current advisor, you should really check them out. Okay. There's this program, it's called Broker Check, that you can actually look up your advisors and see if they have any issues. Okay. Number two, you should ask your financial advisor, what are the charges? How much are you paying annually? You know, I've dealt with so many clients of mine, and you ask them that question, they have no clue. The third question I'll ask your financial advisor is, you know, what are you, especially with situations going the geopolitical world we're living in, what are you doing to protect some of this of assets? Because the market has grown tremendously. We should try to capture some of those gains. So those are some of the questions you should really, really be asking your financial advisors. Okay, because you know, and let them give you either something in writing or let them be direct.
Dave, I know you're also a bit of a foodie here on Long Island. Give me your top 3 restaurants to go to on date night on Long Island. On the spot, off the cuff. What do you got for me?
You got me there, Chris. You got me there. You got me there.
I know we've talked a few times, and you always come back to some of the best meals to get to.
I like a good steak.
I know.
You know, the best steak that I had was at Bryan and Cooper. You know, I was at Blackstone recently.
Yeah.
Their food is excellent. So I'm a steak person. Italian food, I gotta try the place that you said, Chris. I don't know the place name, but
that was at Trattoria in St. James. Shout out those guys.
okay.
Fantastic restaurant.
But there's so many great restaurants in Long Island. I think it's unbelievable.
That's why it's so expensive. That's why we need guys like you to tell us how to save our money. Stop going out to Mosaic 5 nights a week and to save some for retirement.
That's right. No, Long Island is great. The food is great. The people are great. I live in Long Island now for 20-something years, so I love Long Island.
Dave, I know we talked about how everyone's situation is unique. Everyone's situation is different. But what's one general best practice that everyone should start doing today after watching this episode?
Should go to your job and find out if you have a 401k plan, especially if you're working. Because it's important, if you have a 401k plan, it's the easiest form of saving money. It comes out of your paycheck, either weekly, bi-weekly. You don't, after maybe 2 or 3 paychecks, you really won't miss it. So that's your first thing you should do. The second thing you should find out is your company have matching contributions for you. Okay. Make sure you put the same amount because that helps you. Like I said before, it's like getting a raise and not taking it. The third thing is that if you have investments, you know, it's always good to have someone give a second opinion. I know all of us trust our advisors, but it's always good to have a second opinion. Hey, we go to the doctor and we go to do a surgery. We'll ask one doctor and then we'll get a second opinion from another doctor. Why not do the same thing with your financial advisor?
Yeah, it's so funny you say it that way. Like, I know people who will go to buy a car and they'll spend 8 months researching the make, the model, this versus that. Have two mechanics look at it. But when it comes to the 401k and the life savings, they'll go to Uncle Jimmy instead of talking to an expert. So people should put the same level of research, thought, and care in their long-term financial planning that they do in terms of if they should get the iPhone 17 or the Samsung, it sounds like.
So you could get the iPhone 17, but please put something aside because before you know it, like I said, we will be maturing very, very soon.
Yeah. So max out your 401k, cut your spendings down, and talk to a financial advisor.
Absolutely.
1, 2, 3. Love it. Thank you again, Dave.
You're welcome.
There you go. Hashtag right there for my boy Dave. Dave, thank you so much for joining us here to kick off season 3 of Making Sense of Long Island. We appreciate it.
Thank you, Chris, for having me.